All right, we're just about to get started here. I see all of the participants filing in, so we'll get going in about 10 seconds. All right, beautiful. Looks like we have most people in at this point. Thank you so much for joining the webinar today. The topic of today's webinar is essential selling strategies to lock in gains and minimize losses. I'm excited for this webinar because this is an extremely important topic because it will help you avoid losses in the stock market and identify when a stock is nearing the end of a big run. My name is Jacob. I'm one of the premium product coaches here at MarketSurge, and I am, of course, the host of today's webinar. And before we get started, as always, I'd like to remind you that this webinar is for educational purposes only. So none of this presentation should be taken as investment advice. So please take a moment just to review this disclaimer before we dive in. All right, so let's go over the agenda. In this webinar, we're going to discuss the essential principles that every investor should know about selling stocks. We will then turn to the critical defensive sell rules that you need to know to protect your portfolio. Then we'll go over key signals to look for when deciding whether or not to sell a winning stock. And finally, I will illustrate some of the key sell rules to show you some examples. There are two key ideas about selling that you'll always want to keep in mind. First, buying at the right time solves half of your selling problems. If you buy a stock right as it breaks out of an early stage base, you do not chase it by buying 10% or 15% above the proper buy point, then you are much more likely to be able to hold it through normal pullbacks. In fact, the majority of big winners in the stock market don't ever close below their pivot point after they break out. This is why it's so important to buy a great stock in the buy zone. If a stock is down 4% to 5%, you will likely already know that something's wrong. However, if you buy an extended stock, you might either sell the stock too early or be tempted to take a big loss in the position. We want to avoid both of these negative circumstances. Second, don't be surprised by big block selling after you buy during a bull market. Even the best stocks can sell off for a few days. As always, this selling might just be caused by other investors' emotions. This is a key reason why we like to refer to the weekly chart in MarketSurge. The weekly chart helps us avoid the noise you can sometimes see on the daily chart. Always remember, one day doesn't make a trend. Even winning stocks can pull back for a few days and then end up going on a big run. Another important thing you need to know when deciding whether or not to sell a stock is that while there are some fundamental characteristics that can kind of give us signs that it's time to sell, most of the clues are found on the chart itself. This is the case because many big institutional investors start to sell their positions in companies when the financial statements still look strong. These big institutional investors are the smart money. And if they are selling a stock, then it's probably time for us to take the hint and head for the exits as well. And the technical signs that we see on the chart help us do that. There's a number of psychological factors that make it hard to sell a stock properly. First, it's hard to admit defeat and take a small loss. Second, it's fun to buy stocks, but it's not as much fun to sell them. Because of these psychological factors, some people make the mistake of averaging down in price. Averaging down means buying more shares when the stock goes down, so the investor has a lower average price that they paid for their stake in the stock. This is potentially dangerous because it means getting more exposure to a stock that's already showing signs of weakness. In addition, after an investor averages down, it is only going to get harder to sell early. Be humble and admit that this particular investment just didn't work out. Okay, now let's discuss defensive sell rules. These are some of the most important rules to know about being an investor because they're going to allow you to protect your portfolio. Now, if you buy a stock and the price goes down, it can be hard to think straight. In fact, it's easy to come up with rationalizations and tell ourselves, when it gets back to where I bought it, then I will sell. However, it's critical to remember that a stock becomes a loss when the price goes down, not when you sell it. When you're down on a stock, it's best to just take a very small loss when it won't really hurt you and you can go find a better stock that has a much better chance of working out. Always remember, you don't have to make your money back the same way that you lost it. We always want to keep our losses small in the market, and this rule is arguably the most important lesson of all. Individual investors have some advantage over the big institutional investors. One of the biggest advantages that individual investors have is that they can move in and out of stocks quickly. Meanwhile, it can take big institutional investors months to buy and sell all of the shares that they want to. Since institutional investors can only move out slowly, they have to diversify their portfolios to lower the risk that they have in any one given position. However, as long as a company has at least modest volume, an individual investor can close their position in a stock as soon as it's clear that that investment is just unlikely to work out. Therefore, it's smart to keep your losses to an average of 5% to 6%. This means that if you bought a stock at $100 per share and it's now down to $95 per share, then it's probably time to move on to something better. However, it is critical to keep an important rule of mind. We never take a loss greater than 8%. 8% is the no questions asked sell point. If you do not take a loss at 8%, you are accepting more and more risk, and it will only get harder to sell. Remember, there are other great stocks out there, and cutting losses is like buying an insurance policy for your portfolio. Keep in mind that every 50% loss in the market was once only an 8% loss. Now, part of being an investor in the stock market is accepting that there are risks. Furthermore, there's no such thing as a safe stock, and even a seemingly very strong stock can go down for a number of reasons. Now, the best way to protect yourself from the inherent risk in stocks is to be disciplined and recognize the reality that you won't always be right. And that's just part of being an investor and a human as well. To limit your risk, you always want to have an exit plan in stocks. One of the most important lessons that I've learned is that the rules for staying disciplined are there for a reason. The people that really get hurt in the market are the ones who don't stick to the plan and they don't follow the rules. Okay, so now we're going to talk about the rules to know when you've made a healthy profit on a stock and you're deciding when to sell it. This is a lot more fun. It's equally difficult in a lot of ways, but it's always good to be up on a stock. Of all the offensive selling situations you'll face as an investor, this is the most common. When a stock breaks out of a base and moves 20 to 25% higher, there's a strong likelihood that it will form a new base. So unless you want to sit through a base formation, it's usually best to take a profit here. Of course, you might be worried that the stock will go even higher after you sell. But remember, the goal in investing isn't always to exit at the peak in a stock's move, but to book profits in a consistent fashion. And this is one of the other psychologically difficult things in a stock. If you sell it at 25% and it goes to 50%, we end up thinking of kind of all the money that we lost out on instead of all the money we made on a good trade. Now, there's going to be a few elite stocks that you buy that should be held longer than just that 20 to 25%. And one thing that we can do to try to help us out to identify those is to look at the stock's earning history to really aid our judgment. So ask yourself, does the stock have 3 to 5 years of 25% or better EPS growth? Is the stock a leader in its industry group? Does the stock sell a new product or a new service that's really going to propel that stock higher? The price action of a stock will give you additional important clues. If a stock advances 20% in the first 2 or 3 weeks after a breakout, you should hold the stock until the 8-week mark. Then you can reevaluate at that point. However, you still need to use your common sense. If a stock jumps 20% in 2 weeks and then drops sharply, sell it before it turns into a loss. That is critical. If you aren't seeing 20% gains, you should review your selection process for stocks. If selection isn't the problem, it could be that the market just isn't giving sizable gains right now. In that situation, you might want to just take profits at 10 or 15%. And if 10% gains aren't doable, you should wait for a stronger market when breakouts are just working better. Now, when a stock is later on in its run, you might see a climax top. And a climax top is something that's really occurred at the end of many great stock runs. So you'll want to familiarize yourself with it. A climax top is a sudden price advance over 1 to 3 weeks after a months long kind of big ascent in the stock price. And it can really occur in the final stages of a stock's big run. To identify a climax top, look for a stock to have one of its largest daily price increases since the start of its advance. In a climax top, the spread from the stock's low to its high for the week is frequently bigger than it is for any other prior week in that move. As is the case in many chart patterns, volume is also key as you watch for these climax tops. The ultimate top might not happen on the exact day with heavier volume than previously seen in advance, but you don't have to have peak volume necessarily in order to get a climax top. Okay, now let's go over to some examples of sell rules that you'll want to look for when a stock has gone on a good run. Now, if a stock goes higher, but the volume goes lower, this can be a sign that institutional investors no longer have an appetite for the stock. And we saw this. This is Shopify as of a few years ago, kind of a classic. We'll look at a couple. We saw a few sell rules on Shopify at that time. So we saw the stock, right? It just went on this killer run, right? Just really incredible. We see the relative strength line just shooting higher. And then all of a sudden, right, that relative strength line starts to go sideways, one thing that we'll look for. But here, it's still working its way higher, right? Working its way up to new highs. But look at the volume. It just jumps out at us, right? It's making a higher here. But that volume just totally dries up, really, in just a major way, right? We had these huge price bars, or I'm sorry, these huge volume bars over here. And then all of a sudden, just drops significantly, even though the stock is still working its way toward new highs for quite some time here, right? And only later on, when the stock really starts selling off, do we see that huge volume come in. But instead, this time, instead of it being blue volume bars, we're getting pink volume bars, right? In a major sell-off, right? So to avoid this type of thing, when we're really up huge on a stock, right? We grabbed maybe a decent size of this run here. We start to really just kind of see the stock make a more tepid move higher, a move higher towards its peak. But that volume is really giving us a huge clue about what this stock, that the behavior in the stock might have changed. Another thing, closing at or near the day's price low. Another warning sign is when a stock begins to regularly close at its low for the day. So we see this one a little bit later on, right? This is Shopify as well, right? Kind of at the early part of that really big breakdown, right? So I kind of put arrows on here to point each of them out, right? This is a close at the low. This is a close at the low. This is a close at the low. We also have a close at the low here, and then this huge move, right? Hopefully, if you hadn't, woken up at this point, hopefully this was your big wake up call. Hopefully you saw it much earlier. This was a pretty steep drop, but we were getting these signs even before that, right? And we're just seeing it close lower. These are signs of pretty big pessimism in closing at the low of each trading day. Late stage bases. So we tend to consider a stock in a fourth stage base to be in the later part of its run. By the time a stock reaches a fourth stage base or later, the whole investing world has pretty much caught on, right? Everybody pretty much knows about a stock that's in a fifth or sixth or what have you stage base. Now, when it's in a late stage base like that, it doesn't mean that the stock can't still work, but the risk reward ratio just isn't as good at that point, right? So again, Shopify, we will move on to other examples, I promise, but this one, I always remember it. It made it all the way up to stage 7. If anybody knows of any stocks that went into later stages than that offhand, drop it in the chat. We'll we could it'd be fun to see kind of what stages some stocks made it to. But this was a 7B, right? So it did still work at 4, 5, and to some sense kind of that 6. But here we're at 7, right? This is definitely very late stage. It can work, right? But we're just taking a lot more downside risk. Is a type of area where if someone buys a breakout like that, just have to be much more careful and really monitoring them very closely and kind of having our stops in place, right? Or just be ready to sell when we're really starting to see a kind of major risk really start to manifest in the stock, right? Signs of a poor rally. When a stock has gone on a huge run and then starts to show signs of a very weak recovery, you have the opportunity to sell before a stock really starts to break down. So as promised, we have a different stock. Here's Tesla, right? So stock, huge run, right? We kind of had this kind of climax type of action over here. The stock tries to make a new high, right? Doesn't work out. Tries to make a new high again, doesn't work out. Tries to make a new high, doesn't work out, right? Kind of major sell off at that point. So we're kind of seeing that these kind of recoveries and these breakouts just aren't working the same way that they were, right? When again, kind of this 45-degree or bigger type of angle as the stock really shot higher. Relative strength line, another thing that we look for. Total change in behavior. Stock is no longer outperforming the market, and it just cannot break higher than it previously was. We kind of see these waves lower as it really just kind of fails to make another strong rally. Decline from the peak. If a stock has gone on a big run and it declines 12 to 15% from its high price, you may want to consider selling. And kind of the exact percentage that we use will depend a bit on where we bought it, right? Like if it triggers our 8% sell rule, then we're out, right? But we're tripled our money, right? Got in on a huge part of this run. We can give it a little bit of wiggle room, but you need to have some idea of, all right, at what point am I willing to, give up some of my profits here? And 12 to 15% is a good number, but we don't want to round trip a stock, right? We don't want to, quadruple our money and then just give it all back and sell it for the same price we had it. So have a plan. Poor relative strength. So poor relative strength is another sell signal to look for. On the Tesla chart, we can see a clear change in the relative strength line from being in an uptrend to being an average performer before there was a sharp decline, right? Kind of mentioned this earlier on the previous one, that this relative strength line was telling us everything. It's a leader in the market. It's doing much, much better than your typical stock out there. And then just behavior change, right? Really in here, just your typical stock with some extra volatility in there, kind of when it based, but this was no longer a leader at this point, right? And we could really see that kind of this whole way through. It was not like this anymore. We can also look at the behavior of other stocks in the industry, right? Just kind of like I mentioned when we hit that 20 to 25% gain. So another good indicator that you can look at is the behavior of stocks in the same industry group, right? So when Tesla slowed down, we also saw that BYD was showing serious signs of weakness, right? I mean, this was a huge a huge pullback here, right, for this cup, a bit jumpy, but we had 40 down to 21, right? Almost a 50% drawdown. Kind of made it all back, 43, but just a ton of weakness here, right? That relative strength line just crashing, breaks below the 50-day, ended up breaking below the 200-day. We see a close at the low here, kind of close at the low here as well, and just a lot of signs of weakness in that same industry group. All right, breaking support. So breaking support occurs when a stock closes below an established trend line. One example is a long-term uptrend line is broken. So here we can see on Alphabet that the stock was consistently working its way higher. And each time the stock pulled back, it found support. And so we see that here, right? Kind of starting here, made its way higher, pulled back, found support, made its way higher, pulled back, found support, made its way higher, pulled back, found support, made its way higher, pulled back, ended up breaking below that long-term trend line, right? So it eventually stopped finding that support, and that's when the run ended. So it's something that we want to pay attention to. You can always draw these on the chart with your markup tool, and that'll give you a good visual of what that long-term trend in the stock is, right? And this worked wonderfully, right? Until it didn't. Working all the way from some 1600 in change here, and peaked out during that particular run all the way up to 2900. The greatest one-day price drop. When a stock has its largest one-day price drop, you should check to see if there's other sell signals that also arise, right? So this is Alphabet kind of later on here, and we see this huge price drop, right, closing at the low. We see that later on, right? So that's a type of another signal that we'll look for, right? Had this huge price drop, closed at the low, closed at the low, closed at the low. Hopefully we were kind of seeing all the signals here with it dropping below the 50-day, this huge volume coming in, down almost 5% in a single day. So something that we want to pay attention to. Similarly, falling price on heavy volume. When a stock has a huge drop in just a single day and the volume is high, you're getting a signal that major institutional investors are selling the stock. Sometimes the volume will be at the highest that it's been in years, right? And so here's Tesla again, right? We kind of see those waves lower, and we're just seeing some pretty, right? The biggest volume bars are on down days at this point, right? We've kind of seen the end of that run. We've talked a lot about the other sell signals that are on there. And really, most of the tall bars are pink, right? So that's all heavy institutional selling going on, and one of the key things that you'll want to look for. Now, the 200-day moving average line turns down. This is another sign that a stock's run could be over. Maybe one that doesn't get quite as much attention as some of the other ones, but it makes a lot of intuitive sense, right? About telling us kind of the trend in the stock. Is it trending higher, right? Because this is factoring in 200 days of trading. And so we see here, right, really throughout this whole run, right, pretty dramatic move here, right, kind of straight up on the 200-day. During this massive run, all trending up, right? Really is the whole way as the stock is working its way higher. Since the 200-day factors in so much time, it's going to be less reactive than the 50-day, and of course some of the other kind of shorter term moving averages. But really, right, just as we start, right, we kind of see it crest, we see a peak here, and the moment it really starts to trend down, is really what right before things start to get ugly, right? It's almost almost like a roller coaster, right? Like just as we're starting to go down, before a kind of a big drop. So it's something to pay attention to. And again, I don't think this one gets quite as much headlines as some of the other ones, but it can really tell us a lot that the overall trend, the behavior, the activity of that stock has really changed from what it once was. And then we also have living below the 10-week moving average. So another one that factors in the moving averages that we have to help us. Like really a big reason why we have these moving averages built into MarketSurge. So you want to consider selling when a stock has gone on a huge run, but then closes below the 10-week moving average and really struggles in a major way to find its way back above that, right? Every stock pulls back, but how does it do, right? Does it find support? Does it stop moving down? And so we see that here, right? Breaks below that 10-week. It tries to get back higher, but fails pretty quickly, right? Again, a wave down, lower low, tries to get above that 10-week again, succeeds for a little bit, but again, a lower high, and then really just starts to break down at that point. Now, when should you be patient and hold a stock? So assuming a stock didn't pull back and hit your loss zone, you might need to hold a stock for even up to 13 weeks after you first purchased it before you can really convincingly conclude on that basis that the stock was just a poor selection. Although in a strong bull market, we probably should just put our money into something better, right? So when a stock breaks out very powerfully and you see one of those green flags on the chart, meaning that the stock went up at least 20% in 3 weeks, then that stock is more likely to really go on a big run than just your typical stock. And so remember something that, us coaches like to always repeat. Your objective is not just to be right, but to make big money when you are right. And of course, once you make that big money, you want to be able to hold on to it. And these sell rules are really going to help you out in doing that. So I hope this was informative. I will open it up to questions now. And I do see some things here in the Q&A. What I'll do, because I know not everybody wants to stick around for Q&A, I want to show all of you how you can contact us if you don't already know. And then I'll go back to the questions. We'll have some fun and go into some of these questions here. So you can always email us, marketsurge@investors.com. If you want to talk to me, you can single it out to Jacob and I'll reply to you. But all of us coaches are checking this email. We pride ourselves on our responsiveness, and we want to help you. You can call us 1-800-831-2525. We try to stay open for everybody, so we have a long set of hours. So from 8:30 a.m. Eastern time all the way till 8 p.m. Eastern time. All right, so with that, let's go back to the questions, check some of these out. See, one question, is the webinar recorded? Yes, it's recorded. It's put in on the homepage. You just hover over resources, and then it'll show a box and it'll say webinars. And you'll be able to watch the recording of this to check it out later. These sell rules are very important, so you might want to see it again. Let's see. Okay, what is the 9 next to the 7B in Shopify? Yes, very, very important question. So let's head back over to that. I get this question all the time. I know it really confused me. So I'll be happy to show you. So stage 7B9, right? It almost feels like battleship, right? Like all these like coordinates, but it makes a lot of sense. So here's the secret. So it says 7B. So in order, by our rules, in order for a stock to go up a count, right? So in order to go from stage 1 to stage 2, the stock has to go up at least 20% from the breakout point of stage 1, right? So let's use easy numbers for me. Let's say a stock breaks out at 100. In order to go to stage 2, that stock has to reach 120 before it creates a new base. And if that stock reaches 120, then that new base will be a stage 2. Let's say it only goes up 10%, right? So the stock's at $110 per share, and then it bases. That will be a 1B. And so in this instance, right, we had this one is particularly big with a bunch of numbers in there, kind of why I picked it. But this one was on a 7B. So the previous one would have been a 7A, right? It broke out, but look how tepid this was, right? We were at the end of a big run. This stock was not making big moves anymore. So it went from 7A to 7B. Now, the 9 there, that's saying from stage 1, right? So starting at that very first base since the beginning, there's been 9 total bases, counting all of them, regardless of the whole 20% stuff and what have you. All right, let's see what else we have here. Can I give an example of a stock with the green flag at 20%? Yes, and I have one of them here, actually. So we saw that here with Shopify, right? It was going on this huge run when things were still good for the stock, kind of towards the end of its big run. Well, maybe not. It still had a ways to go, really. But this was a sign of a really big move, right? And that's actually what this was telling us, right? That this stock had a very powerful breakout here, right? So the green flag, in order to have one of these, this will be very helpful to you because it's going to kind of, right? Because I talked about how it can be kind of tough when a stock hits that 20 to 25% range. Do we sell, right? Do we just take our profits, be happy about it and move on to the next great stock? When we get something like this, we're getting a signal, right? It's grabbing our attention and it's saying, this stock is a big mover. We're getting a strong breakout, right? Look at all the volume coming in as that stock was breaking out from this base, right? And it went up 24% within 3 weeks, right? So very strong move. It's telling us that the stock likely still has quite a bit ahead of it at that point. So I hope that helps. Okay, let's see what else we have here. All right. So when a stock is down 15% from its peak, thought it might be a good point to buy. Okay, yeah, it's a fair point, and certainly kind of one of those things where our kind of and we train our eyes over time, right? Like we will get more used to looking at these things and really evaluating kind of exactly when to sell. So let's say something. Let's take an example. Like you bought a stock and you tripled your money, and then you're down 15%. You're not happy about that, but you're happy about the overall trade and where you're at. You're trying to decide where to sell. Well, we have multiple sell rules, right? It's down 15%. You're saying, do I call it a day? Do I trim? Do I hold? What am I going to do? Well, then I would go to some of the other things, right? What we talked about, closing at its low. Is that 200-day moving average start to trend down? Is the volume super high, right? Does the stock, is it kind of look like it's just building a base, right? Did it go down that maybe 10% and then start to work its way higher? That 15% start to work its way higher? Those are all going to be signals to us. So none of these rules will likely show up alone, right? It's so when you start to see multiple things, breaks a trend line, 15% off of its peak, we start to see that 200-day moving average trend down, closing at the low for the day, right? So when we saw in a lot of these, right? I used Shopify, it was like 4 of them, and Tesla was like another 4 of them. We saw a bunch of different sell signals all show up together, right? So when you see one of these, you're really on the fence, you're not sure what to do, ring the register, what have you. Go to some of these other sell rules, right? You can always come back to this presentation. It'll always be here. And you can always check it out and kind of measure everything and see if you're seeing a bunch of different sell signals show up. Okay. All right. Awesome questions. Thank you so much, everybody. I really appreciate it. I hope this was helpful to you. I hope it helps you save some money out there in the market. All right. So take care. Have a great day. All the best.